Good afternoon, dear subscribers of my channel. My name is Victor Scheffer, and today I will be talking to you about a very important topic, buying home. And it's not just about buying your first home. This includes the second, third, and even the 10th. So let's not waste any time and discuss this important topic. I think each of you would agree that buying a home is a very important process in this world. I don't know about there, but here it's definitely the case. So in this video, I will tell you what to pay attention to. When we talk to clients, we hear the same phrase, if only I had known this earlier. And we're not just talking about clients who have recently arrived in Canada and about people who have been living here for a long time, because they are still relying on information that was accurate at the time they bought their home. But mortgage business doesn't stand still. It is constantly changing. So in this video, I will tell you about all the factors that you need to consider. What should you avoid doing to ensure that your home buying transaction goes smoothly? One of the most important factors when buying a home is your credit history. Many people think that just because they have lived in Canada for a long time, they know everything about it. The credit bureau doesn't stand still, and what used to be unimportant is important today. Today we will talk about this topic, so I advise you to watch my video on this topic. You'll know more than 99% of our population about credit history, or maybe even more than the people who work at the bank. The most important factor that affects your credit score, it's about how timely you pay all your bills. If you receive a bill, you are given a deadline. For example, if we're talking about a credit card, you are given a deadline. The main thing is that you pay within that deadline. If for some reason you were late, I've had clients who called in a panic. I didn't make it in time. Now I got a call. I was late by 3 days, 10 days. Don't worry, this may be bad for your wallet because you will have to pay interest since you didn't pay your credit card on time. But this will not affect your credit history because it will only negatively affect your credit history. Let's say if you're late by more than 60 days. If you're late by 3 days, 10 days, or 30 days, there's no problem at all as far as your credit history is concerned. If you're late by more than 60 days, that's a problem. But if you're late by 3 days, 10 days, or even 30 days, there's no problem at all. As for credit history, you just have to pay interest. I also don't recommend paying in advance. For example, you paid for something at the store, then rushed home and quickly paid off your credit card. That's not good for your history. Wait for the letter. Pay on time to avoid a negative report. When you receive a letter, there are deadlines, and the main thing is that they pay within this deadline. If you pay in advance, then a report goes to the credit bureau saying that you haven't used that card, and the report usually goes out on the 15th of each month, and that's not very good for your credit history. The second factor, a very important factor, is that you shouldn't use too much of your credit card limits or line of credit. You shouldn't use more than 50% of your limit. If for some reason you need to use the card, let's say you have a $3,000 limit and you want to use, or you need to use $2,500 a month, and you pay zero every month, even if you're paying off your balance completely, it will still negatively affect you because you're getting too close to your limits, to your credit limit. So in this situation, just go ahead and increase your credit card limit so you always try to stay within 50%. The third factor is your history. It's also important to have a long history. Many people make the mistake of getting a new credit card because they think they know a lot now. Maybe there are some attractive air miles or cashback offers and so on, and they end up closing their old card. It's not good for your story the longer it goes on. If you have cards with a long history, mistakes will penalize you less. In general, for your credit history, it doesn't matter if you use a credit card just once or 100 times. The main thing is that it should be used at least once. But if you really don't want to use those cards anymore, that's fine. Just leave them alone, cut them up, get rid of them. But under no circumstances should you close them so that your accounts continue to show up. If these are paid cards, do you not want to pay that annual fee anymore? Tell the bank that you want to switch to a free one, but make sure that your account still remains on your credit report. And the last factor that is also very important for your credit history is credit mix, so that you have several credit cards. Line of credit. Car loan, I don't recommend it unless you really need it because a car loan is a short history. When it's over, that's the history. When it ends, history. And when we talk about line of credit, credit mix is important. Consider a line of credit, as long as you don't close those cards, which I don't recommend. So, credit mix is important, but try to have something like a line of credit. The last factor I want to mention is for people who are new immigrants. Since you are new, there are a lot of factors to consider. When we apply for mortgages, we need additional references. We might need receipts for phone bills or internet or something else covering the last 12 months. Or sometimes a person has a credit card, but the credit card is only in one person's name. It's important that all credit cards are also for payments. Let's say for the phone, for the internet, for electricity, that all these bills should be in both the husband's and wife's names, not just one person. Otherwise, we'll have problems using the income from one person or the other. This is an important factor for those people who have recently arrived in Canada. The second most important factor, with which we also have a lot of problems, where did you get the money? For the down payment? A lot of clients don't keep their money in banks, especially people who have recently arrived in Canada. It's important that they are deposited into the account. They need to sit there for at least 90 days. It used to be very simple, just let it sit for 90 days and we wouldn't ask any questions. Now we still have to provide answers. If the money is a gift, you often need to show information about who gave that money. There are many exceptions. We use all the legal loopholes. We never do anything illegal. We use all the legal loopholes. But we often have problems with clients because the money wasn't kept in the account, or what clients often do is they keep moving it around. Today they are here, tomorrow they are there, the day after tomorrow, there. And we need to constantly show the history of this money. If you move money around too much, it may get to the point where you are simply denied money, because that's when questions start to arise. In general, when money goes abroad, there are a lot of problems and questions. So I highly recommend you, before you start the buying process, call us so we can get you a real approval. We'll explain to you how the down payment works. If the money is coming from abroad, there are options too, but you need to do everything correctly. The problem is when a person wants to buy a house, they've already found it, everything is ready, and we have problems with the down payment. Are you saying that the house you found, you might have to let it go, so that we can first get everything in order with your down payment? Only after that can we work together on the minimum down payment for buying a house, which is 5%. If you are buying a house to rent out, you need 20%, but there are also options to buy a second home. We call it a second home. You can also buy there with 5%. But it's a very complicated topic, so I recommend you give us a call and we'll explain everything to you. There are also a lot of government programs now when they help people buy houses. I recorded a separate video on this topic. I recommend checking it out. You can invest money in this account before buying a home. Even if you're already buying, we can open it for you to invest and withdraw money. There have even been situations where a person is already buying a house, but they didn't have it. We open it up, the person invests money there, and then we take the money out from there. He saves on taxes, and at the same time, we use that money as a down payment. Overall, there are a lot of interesting options out there, such as the First Home Savings Account, RRSP, for first home buyers. But one point is very important. If you are already actively working with us and you are starting to buy, please do not invest money in the First Home Savings Account until they have been sitting in your account for 90 days. And even better, don't do anything until we close your mortgage and give you the approval. After that, you can do whatever you want. I'll say it again. The down payment is one of the biggest headaches we have, especially with immigrants who have recently arrived in Canada. We have to come up with alternatives that aren't very beneficial for the client, or we just have to refuse the person. So get in touch with us in advance. We'll explain everything to you and prepare you so that there are no issues. And don't forget that besides needing money for the down payment, you also need to have money for the closing costs. It depends on the province. It could be a small amount, but always say on average, you need to have about 2% extra for expenses like the lawyer, the material book, mortgage registration, and so on. You have no expenses with us. Our service is paid for by the bank, not by you. We are completely free for you. We are beneficial for you, but free. But there are additional expenses and taxes and so on. If you're not in Alberta, it's a different world. Everything is cheaper there. But if you're in other provinces, expect around 2% or more. The next topic, this is your job. It's very important for you to have good quality work, if possible. Right now, we're not in a very good economic situation, and our biggest risk is that people might lose their jobs. So my advice, especially now, if you're planning to buy a house in the near future, don't change jobs, even if your new employer offers you more money. Why? First of all, will we need a history from the new employer later? If it's the same field, then it's easier. But if you change fields, it might happen that you'll have to work there for 3 months. The second problem is that, due to our economic situation, you might get laid off. Because if companies have any problems, the first person who will have to leave this company, the one who arrived last. So if you have a good, stable job, stay there until we get your mortgage done. And not just until we get the mortgage done, but until you physically move into the house. So if we get you a mortgage, and then you tell your employer, that's it, I'm quitting, the bank might call your employer even before you move into the house. The employer will say, sorry, he no longer works here, and everything will fall apart, and then it will be a big problem. And we had one situation where we contacted the employer, the bank contacted the employer, everything was great, the person was quitting, and the employer called the bank again. They called the same number we called and reported that the person had quit, and the deal fell apart. We will never leave a person in trouble. But you can't imagine how big these problems can be. How big can they be if you don't think about it in advance? So please, keep your job, stay there, don't change jobs until we get your mortgage approved. The next topic is in the process of approval or in the process of purchase. You need to be careful with all kinds of loans. We had situations again when we took out a mortgage, everything was fine. A person goes and buys sofas, cabinets, or even a new car at the store. It comes down to closing the deal. The bank checks the credit history, and they have the right to do so, and there are 2 additional loans that appeared in the credit history. So now we have a problem. Don't make any purchases, because any purchase you make on credit will show up in the credit bureau. And if, for example, we talked about a car, we got you pre-approved, we say everything is great. 5 months later, you found a house and the realtor struggled with you, driving you all around the city. He knows, since we confirmed to him that you qualify for $500,000, he sends us the offer, we check the credit bureau, and there's a car for $500 a month. That's it. Deal falls apart. It's dangerous if you're already in the process, you've already bought a house, you've closed the deal, and you don't have the option to back out of that deal. Don't make any purchases so that your credit remains clean. Also, make sure to pay all your bills on time so that your credit history doesn't get damaged. Try to keep your financial picture, as it is when we work with you, until you get the keys. You can do whatever you want after you receive them. In the end, you will still have to pay for the car, the sofa, and some furniture or anything else, but that's already your problem. But it's important for me that there are no problems during the home buying process, so that you don't take out any additional loans. If you make that mistake and buy a car before you buy a house, then at least buy a bigger car so there's enough space. Because it might turn out that way, that you'll have to live in that car, because you'll have to give up the apartment. You can't buy the house, you'll have to live in that car you bought. And now let's talk about the topic of qualification. In order for you to get a loan, you need to have certain income and expenses. There's a simple rule of thumb: 20,000 in income gives you 100,000 in mortgage, so you can already have a rough idea of what you can expect. But that's very rough information. In fact, there are many different factors that you might have children and you receive money for them. We can add them. You might have rental property and you have rental income. We can add that in general when we work with a client and a person asks us, what can I even expect? What can I expect? I always say this to clients. It's impossible to answer that question for you. Even if a client says, I have the same situation as my friend who just got a mortgage from you, that's impossible. Your friend, maybe you both work at the same job. Maybe both of your wives don't work, but he might have more kids and you have fewer. He has a husband with credit and you don't have credit. He has a good credit history and you don't. So it's impossible to give you an answer in just a couple of words. That's why I always say this to clients. Let's do it this way. First, let's take your information. And not only will we take your information, but we'll also check the credit bureau. This is very important. The credit bureau is like the Bible for us. That's everything for us. And then even better, let's take a look at your documents, because often the information doesn't quite match up. Because a person may not have thought about some points or didn't know that they were important. And so when we have the whole picture, then we can tell you exactly what you can expect. The conditions for getting a mortgage are becoming stricter and stricter. So when I talk to clients I've worked with before, they say, well, Victor, how is that possible? But we used to have lower salaries and we were able to buy that house. Right now, our salaries are higher and we still can't even get the mortgage that we used to get. It's all connected with laws. They change constantly. So if you work with my company, brokers, they are all up to date. If there are any changes, first of all, I communicate through this channel, but if there are any changes, we'll let you know. You can't forget that besides having to pay the mortgage, you'll have a lot of additional expenses. People often compare, oh, I currently live in an apartment and I'm paying the same amount of money that I will be paying for the mortgage. Yes, on one hand, that might be the case. But besides the mortgage, you have additional payments. For example, your landlord easily agreed to let you have their house and you're paying and everything is fine. That doesn't mean the bank will give you a mortgage, because the bank pays attention to a lot of factors. So, besides the mortgage, you'll also have homeowner's insurance, because in case of a fire, flooding, or anything else, you'll need that. On top of that, you'll have to pay property taxes. If you have any issues with the house, like any repairs, that's now your problem. If you're living in a rental and there's a problem with the house, you just call your landlord. But when you have your own home, all those problems are yours. So for me, one point is very important. Don't forget that if you're buying a house, I don't recommend going to extremes. Just because someone advised you to buy that kind of house or to buy exactly those types of houses, you have to remember that you'll be the one paying. All those advisors won't help you if you run into any financial problems. The next important factor is the location of the house you plan to buy. You can't even imagine how important is that. For that, of course, you need a good realtor. I hope you'll be working with the right realtor, a realtor who knows this area. So what can you buy a house for a good price? But that will be a bad neighborhood, and then you'll have a problem with it. And maybe there, behind your fence, a train passes every 15-20 minutes. You can imagine some problems, so if you buy a house and there is too good a price, it would not hurt to dig a little. I work all over the country. I have no restrictions. I only work in my province about 20% of the time. 80%, it's all of Canada. That's why people love working with us. Because today he's in Alberta, tomorrow he's in Ontario, the day after tomorrow he's in Bessie. And wherever you go, we're with you. You don't need to share your confidential information with 3 different mortgage brokers or 3 different banks. We work all over the country. But, for example, in our province, a lot of people are building themselves and they are looking there. For example, a plot of land costs $100,000, while in another place it costs $150,000. But they buy where it's 100 because it's cheaper, but they forget that all the construction materials, the same price, and most likely if the plot is cheaper, it's probably further from the city. And the delivery of all these materials can be more expensive. In the end, you might save $50,000 on the plot, but building the house could cost as much as buying a pricier home. Ultimately, your house, roughly valued at $500,000, benefits from its location, like a person who bought a more expensive house. But when the houses are ready, your house, I'll just say roughly, is worth $500,000 because it's in a certain area, where maybe the houses aren't as interesting and the prices aren't as high. And another person, their house is worth, instead of $500,000, I'll just say roughly $800,000. So you saved $50,000, but the end result isn't very good. Here, I really advise you to talk to your realtor who knows your area so you don't end up buying a house, maybe in a region where it could even be dangerous. You have kids, and there might be problems with the neighbors. There could be a certain category of people moving in who might cause you trouble. Pay attention to this carefully and so you don't unintentionally fall into that trap. The next factor is the home inspection. There are, of course, cities, especially when the market was hot. If you said you want to do a home inspection, the seller would tell you to go ahead and do it somewhere else. I have 10 buyers standing by who agreed to buy this house without any conditions. Home inspection? Of course, in such a situation, you can't do anything. But if you are in such a market or in such a place, where is the home inspection? Maybe I really advise you to do this here. Again, if you have a good realtor, they'll give you this advice too. Why? Because you came, you're excited, right? You saw this house, saw the garden, how beautiful everything is, what a nice lawn and all. And you can just ignore some points that will cost you in the future. A lot of money. So if you hire a home inspector, yes, of course, it's not cheap. It depends on the city where you're ordering it. In one place, the inspector might cost $500, in another $1,000, but they really check everything. They check how well the walls are insulated. They check the condition of your roof, and very often, thanks to the home inspection, you can save money because the seller agrees to lower the price for you. But there's a catch. If your price changes, it might happen that the bank says, okay, the inspector saw some issues, now we want an engineering report. So even here, I advise you to reach out to us before you make any changes. What could happen? That you simply won't get the mortgage. For all questions, I always advise, especially during the buying process, that realtors do not waste time with you, because he might have shown you houses for months, and at the last moment, everything could fall apart. So I advise you, for any questions, reach out to us and we'll tell you what's important and what's not. It's specifically in your situation because there's no one-size-fits-all approach. No, each client's situation is unique. I won't go into this topic too much because this is a question for realtors. Talk to them, they know your neighborhoods, they know your city, and they can definitely tell you what's important, what's valuable, in which area it's profitable and which it's not. I definitely don't want to interfere here because my field, the field of my company, is to do everything right when it comes to mortgages. You know, I never get tired of saying this. It's very important to get not just the best rate, but the most favorable terms. Especially now when interest rates are going down, you'll definitely want to change them at some point. And if you take a mortgage with banks like RBC, TDI, Scotiabank, or CBC, you won't have a chance to change it because they have astronomical penalties. When we do a mortgage, we always do it with banks like these, where you'll have small penalties if the deal is terminated. I recommend you watch the video on this topic. I recorded it. I explained how the penalties work. So you understand why in one bank, the penalty for terminating the deal, if you want to change the rate, will cost you $5,000, while in another, it will be $25,000. This is an important factor, and I recommend you look into this topic. The next topic is one that many clients don't really like to talk about, but it's a part of life. No one knows how long we will be on this earth. We all walk under God, so I advise you to think about this before you start buying a house. Talk to us. When you're buying a house, you're going to have a lot of stress, and you won't really have the time to fully commit to choosing which insurance is beneficial and which isn't. There can be a huge difference. As for insurance, I have access to all insurance companies, and my 2 agents have access to all insurance companies. We'll choose the best option for you, the cheapest option, the most beneficial option. This factor is important because, God forbid, what happens during the process of buying or after buying a house, the family will have a very big problem. That's why I recommend getting insurance so you can all sleep peacefully. Of course, it's better not to use this insurance, but it's important to know that you have it. If God forbid something happens, you won't have to leave the house. You can stay in this home because we'll arrange for that kind of insurance. You'll have enough money to pay off the mortgage and cover all those unpleasant expenses. Also, so that you have money left for living. This is an important factor. I recommend you reach out to us about insurance. The sooner the better. Even if you plan to buy a house in a couple of years, insurance is very important. Why? Because that's how it is in the mortgage business. Today the interest rate is high, tomorrow it might be low. You might buy better in 3 years because the interest rate could be better or worse. And in the insurance business, you'll always be punishing yourself if you wait until later. Why? Because you're older. Age plays a huge role in the insurance business. The price changes every 6 months. But when we set up the insurance for you, the price stops until, God forbid, one of you leaves this world, or the insurance period ends, or until you decide to cancel it. My advice is to get insurance as early as possible while you're still young and healthy. Because if you develop any health issues, it might turn out that no one will give you insurance, or if they do, the price will be very high. So I'll say it again. Call us. We'll explain everything to you. We'll give you all the options, show you what choices are available, and help you make the right decision. The last point is also very important before you even start thinking about buying a house. You need to contact us first so we can get you approved. Very often, your desires will clash with reality. You want to buy a house for 500, but in reality, you qualify for only 300. There's nothing worse than calling a realtor, starting to look at houses and wasting time. Maybe for 3 months, this person has been showing you all the houses like a taxi driver. In the end, you find a house, you fall in love with it, and you can already see yourself living there. You call us and we tell you, unfortunately, you do not qualify for this house. Or maybe you qualified when we spoke a year ago or 6 months ago, but now the laws have changed. You no longer qualify. Before you even think about calling a realtor, get in touch with us first. We'll get you a pre-approval and a real pre-approval. We'll check everything. I don't like just words. In words, it can differ. We'll check the documents. What we know is that you are fully ready, and we are just waiting for one thing. We're just waiting for the offer to purchase and the MLS. We need these 2 documents. When the realtor sends them to us, we start working on it. Before you start looking, call us. This is your first and most important factor. And most likely in that first conversation we might upset you. We'll tell you that you can, but at least you know even if the news is unpleasant. But then you'll need to adjust your desires a bit to what you can actually get. For any questions, contact my company. You can call us on the phone or send us an email. Fill out the application on my website, or we can call you and take your information. After that, we'll discuss not just estimated numbers, but guaranteed ones. In conclusion, I would like to say a few words on a topic that I would prefer not to discuss. But unfortunately, life makes us do it. When we start working with new clients, we always ask if they have a realtor they are working with. If the client says yes, then we leave them alone. We get in touch with the realtor and start collaborating. We will never try this client. Transfer to another realtor, maybe one we work closely with. Unfortunately, that's not always the case. Sometimes it looks a bit the other way around. Very often, realtors try to send our clients to their familiar broker or familiar banker. Not because it's better there, but because without going into details, there are certain agreements in place. I think that's very unprofessional. It's ugly and unethical when it really comes down to the difference and the quality of our work. I advise you to just go online and check the top 25 brokers in Canada. They evaluate us every year based on the quality of our work. You'll have no problem seeing who's on that list and who's not. I've been in the top 75 brokers in Canada for over 10 years. I wouldn't be surprised if you look for that person commended to you on that list. Most likely you won't find him there. If your realtor is being too pushy, advising you to contact some mortgage broker or banker, just tell him to focus on his work. We'll take care of your financial health ourselves. If you think this video was helpful for you, then it's likely to be helpful not just for you, but also for your neighbors, for relatives, close ones, and colleagues at work. So we would be happy if you share this video and this information with your friends and acquaintances. With that, I conclude today's presentation. I wish you all the best, God's blessings, and good health. Until next time in the virtual world. You are with Victor Sheffer.
Thank you for watching this video. We hope you found it helpful. We would be happy if you share it with your friends and acquaintances.
Follow us on Facebook, Financial Group, and on YouTube versus Solutions. Financial Group and YouTube versus Solutions.
If you're interested in getting a mortgage or need insurance, fill out the form on our website via solutions.ca.
Contact us at 1-877-282-0904 or write to us at safe@vestsolutions.ca.
Enjoy life today, and we will create it for you. Successful tomorrow.